All right, traders, a very, very warm welcome. I am Devang Mehra and welcome to the Financial Analyst YouTube channel. And as I promised, this is about the FII DI analysis that we will do for 21st December, which is today, Monday. So let's get started, guys. Without further ado, let's look at the data first. Let's try to understand what happened in the data. And accordingly, we'll decide what we can do for the markets tomorrow, 22nd December, Tuesday. Okay, so this is the data which has come on 18th December, Friday, and this is the data of 21st December, Monday, today. So look at what FII has done. FII is the big money, and as you all know, we are getting close to this holiday season. It started, so their participation in the market will reduce a little bit, and generally markets do consolidate at this point of time, and they don't move a lot. So this is a unique year, I would say. We are seeing lots of movements happening here, but this generally doesn't happen. But we will keep this in mind. Whatever positions you take, keep this point in mind that maybe after Christmas or during this time, some kind of consolidation can happen. You might not get big moves again. Second thing is, let's understand what has happened. FIIs today, they are holding 53,574 longs in index future. This is the first column is index future. This is stock future. This is index call, and this is index put for people who are new in the video. So they have, and yesterday this figure was 56,707. So today they have reduced long exposure by 3,000 contracts, odd contracts. So by 31, 33 contracts, they have reduced their short long exposure. So they are bearish in the market on index future. It's a very small figure, so nothing to really pay attention to. The stock future, what's the data on stock future? Stock future yesterday, you can see something very important has happened. They were continuously, see, from 152, it came to 149, 146, 142. They were continuously reducing exposure. But today, they have added from 137 to 156. So they are bullish by 19,000 contracts. That's a big amount. This shows me that obviously they are quite good. They are somewhat bullish. I don't know if they're hedging, or they are somewhat bullish on the stocks, maybe because it's fallen down a lot and they want to do some buying at lower levels. Who knows? But they have added some longs in stock futures. So there is a possibility maybe markets can open a little bit higher. That's a possibility. Maybe markets can try to give you a pullback. And overall, for me, it's a sell on rise market for now. Unless until I'm proved wrong right now and we keep on seeing higher levels in the market in the coming days, I will be in a sell on rise market. And I will try to find rallies to sell. So maybe because of this figure, you can get some kind of a pullback or a small rally, and we can sell at maybe 400 levels, 450 levels on Nifty, etc. Let's forget about these two things. Something I want you to pay attention to are these puts and calls. I want to pay a lot of attention on this because I think majority of the game now will be played at this level. See, what have they done in index calls? Index calls, they are holding now 60,000 calls, and yesterday it was 74,000. So today they have reduced calls by 14,000 contracts, which means that they have increased bearish exposure, or they have reduced long exposure by 14,000 contracts. So they are quite bearish, I would say. And it is clear in the data. If you look at the stock future data, index put data, I'm very sorry. FIIs, yesterday they were holding 68,000 puts. Today they are holding 92,000 puts. They have added puts by 24,600. So overall, if you look at a cumulative view, they are holding about 40,000 bearish exposure and only 19,000 bullish. So overall, their data is bearish, and quite a lot of selling has been done by them. Obviously, they will book some profits. Markets have run out a lot. And remember, FIIs are momentum traders. They go with the flow. That is what the FIIs do. And the DIIs, they try to, do some kind of value buying or selling. So that's why you were seeing DIIs were selling every time markets are going higher. And when the markets will try to fall down, then DII will start to buy. Just like your mutual funds and LIC, etc. Look at what clients have done. Let's look at what pros have done. First, let's focus on this data of index future and stock future. So in index future, clients from shorting 14,000, they have shorted another 15,000 contracts. So this means clients are bearish, which is basically good for the bulls, because if clients are bearish, markets will try to stay up. But forget about these two things. They are also reducing their stock future data. So they are bearish in these two fronts. But what I want you to focus is primarily on the calls and puts. because that is giving me quite an abnormal picture. If you see what clients have done from shorting 11,000 calls, so shorting of calls means they were bearish. Now they are long 1,30,000 calls. They have increased longs by 1,41,000, which is so big as compared to this penny picture. Try to see what I'm getting at. They are now bullish in the market by 1,41,000 calls. It's a very big number. It's a very big number. Also, if clients are bullish, by the way, it means markets are bearish, FIIs are bearish. Also, clients were short on puts. Shorting on puts means they are bullish. Buying of puts is bearish, but if it is shorting, they are bullish. So they were short on puts by 1,05,000. Now they are short on puts 1,70,000. So they are again more bullish by 65,000 contracts. So I personally feel the game now is going to happen in this call and put area. If the FIIs want to trap the clients further like they have today, so you can see FIIs have made money, clients have got stuck. If they want to again make them, get stuck in a position, this is where they will be playing. So these are small figures as compared to what you are seeing on the call and put side. This is quite interesting, the data that has come in. Yes, it is not completely bearish because yes, clients are holding some shorts. So as I said, because FIs are holding some futures, stock future, clients have short some contracts in index and stock future. Maybe tomorrow we can get a rise. So we can use that rise to go short, which I'll come to when I talk about the levels. Now look at what proprietary traders or your HNIs have done. Very interesting now. Proprietary traders were short 63,000 calls, means they were bearish. Now they are short 1,91,000 calls. They have increased bearishness by 128,000 contracts. What has happened? Look at what has happened. This figure comes to 141, 128 or 141. So clients have bought, but from whom have they bought? They have bought when your FIIs and your HNIs have sold. So they are bearish, clients are bullish. That's what exactly I was telling you I will prove when the market falls. Personally, I was expecting this figure to become 0 or plus, but maybe some hedging has been done. I don't know, because quite extensively they have bought calls and short puts. So maybe some kind of hedging has done. But see exactly whatever these big money has sold, these guys are buying. So they are getting trapped. I feel the movement will happen here. And see what has happened in the put side. The pros, the proprietary persons, traders have shorted 12,000 puts. Now they are long 24,000 puts. They have increased bearishness. They have added to the bearish exposure by 37,000 odd contracts. So you can see again the puts that these guys have bought, FII and these persons who has sold, client has sold. So again, client is getting trapped. So overall, looking at the data, it is bearish. I wouldn't say 100% bearish. There are some signs of rally or of some pullback coming in. I will not avoid that. But the data is bearish looking at the call and put side. Coming now to the charts. I hope you understood the data. I'm very sorry I could not come earlier. I was busy with some family commitments. But if you're liking the video so far, guys, comment, like, share it with your friends, spread the knowledge, and we'll continue to do this. I really like it. But let's talk about the charts now. It's already quite late. I want you all to sleep early. But let's talk about Dow Jones. I've already given this level to you, this wedge, quite a lot of times. And I told you that Dow Jones has to close below this wedge to start a bearishness, to start a correction. But I think due to the stimulus, I think stimulus has to be approved today. The voting has to be done today. So I think it's all underway. So some kind of profit booking or short covering has happened here. People have, it was down earlier, but now it has again come back inside the wedge. So I would say still some hope for bulls are left. If the crash has to happen, this person right here has to close. So today it has to close below 30,000 odd numbers. It's about 160 points up from where it has to close if markets want to fall. Number two, S&P is also down. It's also down, and it's given a gap down, giving some kind of doji again. I would say, whatever fall happened, some kind of, markets have retraced a little bit. Obviously, it was quite an intense fall, but America has shown some kind of retracements. Same is the case with NASDAQ. It fell quite a lot, but it's again retracing its early gains. VIX is about 25. And I told you this level, it has to go above 30 to be bearish, completely bearish. So again, there is some hope in America. I think this all bullishness is coming due to the stimulus. So we still have about 2.5 hours left in America. So if the stimulus things are not really working out, and if if it gets delayed, then or if some other news comes out by WHO or any other news, things can turn like they have in India. DAX is still down. It's down 2.5%. I think markets have closed now, but it's still quite down. Yes, the earlier gains everywhere, even in India, have gone up, but it is what it is. Some kind of, obviously, after a very big fall, some kind of retracements have happened all over the world. And quite a bit, I think 1% everywhere, retracements have happened. But still, the markets are open, so we will not form such an opinion right now. Even the dollar index, it has given you a lot of retracement. So Bitcoin's down because dollar became strong. But let's talk about Nifty now. By the way, Nifty futures 13,371. So now they're about 50 points higher than our closing today. So as I was telling you with the data, as I said, some kind of pullback can come. So it looks like maybe markets can give you a higher opening tomorrow. We don't know about that. But let's get into the data points, what we need to understand about tomorrow. For Nifty, as I said earlier, RSI is at 56. So Himalaya has just sent me a message to give you some kind of a update. RSI above 50 is considered okay. It's considered a bull market, or I would say it's considered a buy on dip market when RSI is above 50. At the same time, 50 to 60 zone is a consolidation zone. So if your RSI is stuck, if you can see over here, when RSI was stuck in this range 50 to 60, it's a consolidation zone. So either RSI goes below 50, that will mean markets can be fully sell on rise, or RSI goes above 50 and goes above 60, which will again continue the rally in the market. That is one point to understand. The other point to understand is Bank Nifty. Currently, Bank Nifty, the RSI is at 50.42. So as I said, currently it's at a support. But Bank Nifty is currently looking weaker as compared to Nifty. That's the first point to understand. The second point is if on a daily chart, RSI of Bank Nifty goes below 50, then chances of Bank Nifty to go to 40 levels, these are 40 levels, they open up, and even 30 levels will open up, because below 50, as I said, is some kind of a sell on rise market, on RSI. That is one thing. Number two, what I want to add is what do you expect in markets tomorrow? Is the crash going to continue? I want to first prove out what has happened in the past. First of all, whenever such a big fall happened, I think this intensity fall happened only in August. So this fall, which happened in August, is quite resembling what happened today. We got quite a big rally, and after that fall happened, some kind of pause was there. And whenever such big fall happens, markets will try to consolidate, because they need some new sellers to come in and drive the price down, or they need some kind of pause. They can't literally crash. It is possible that they can crash also. I have no problem. But generally, it will try to halt, generally. Number two, it is very important where the markets will open tomorrow. Before that, I want to show you the Bollinger Band, just to show you the 20 MA. Generally, what markets do, they hold the 20 MA. This red line is 20 moving average. Generally, markets, when they are in a trend, they will hold the 20 MA. But if they go below 20 MA, they will take support at the lower Bollinger Band. That is generally what happens in the Nifty index. Look at this example also. When 20 MA was broken, markets will try to take support at your lower Bollinger Band. That's what history has been telling me. Also, if you look at your 50 and 200 MA, you will also try to be able to form a conclusion. Meaning that if 20 MA is not held, you can see over here 50 MA will support your price. And if 50 MA doesn't support your price, 200 MA in the past has supported your price. Where are these values right now in Nifty? These values right now, so the 50 MA and the lower Bollinger Band, they are quite, close by. So I would say this area is a potential support for Nifty if Nifty goes below the 20 MA. So today, one good thing is there for the bulls. That is that you are being held by the 20 MA. So if markets are bouncing from here, you are good to go. But if you are closing below 20 MA tomorrow, the value will change. So if you are closing below 20 MA tomorrow, then the possibilities of you to go to these levels, the zone of lower Bollinger Band and 50 MA, will increase. I don't see a correction till the 200, but that's the worst case scenario, in case things get really bad in the market. So it's just a concept out there. If it happens, we know where markets can stop. Obviously, if markets will come here, buy calls of 1-2 months ahead. You will make a lot of money, but we will come to that later if that happens. So we can hide 200 MA for now. We are concerned with what at this zone. So remember this zone. I've taught you a new concept, so try to use it tomorrow in the markets or in the coming days in the market. Another thing is where the markets will open. Generally, if the markets will open somewhere flat, we can go to a lower time frame and understand the exact openings of the market. So if your markets are opening flat, or in this some kind of zone like this, if the markets open here, because SGX Nifty might be up 100 points, but it will fall down because, as you all know from our memes that we post on our Instagram page, SGX Nifty in the night has a hangover, in the morning opens something else. It's completely not related. Same is the case for American markets. Like you saw today, yesterday everything was up, but today everything fell down. So please don't look at the markets the whole night, because everything can change overnight. So tomorrow, if the markets are opening, plus minus 20, 30 points in basically in a flattish kind of a range, then the selling pressure can continue. Also, if the markets are opening on the gap downside, a little bit gap down. No, I'm not saying 100-point gap down, but basically in the flattish plus minus 20, 30 point, then the selling pressure will continue, because as I said in the earlier video in the morning, that buyers will panic, and they've already panicked. What happened today? It's a good panic created in the market. And buyers will panic. Whoever has bought earlier, for example, whoever has bought a couple of days back somewhere around here on 1st of December, everyone will hit stop loss. Everyone will come cost to cost. So they will panic in the sense that they don't want to do further losses. They will exit cost to cost and they will cover positions, and further price can go down. So it is possible that if you open flat, you can get another fall tomorrow. I will not rule that possibility out. And if markets open somewhere here, maybe a 100-200 point fall can happen tomorrow also. Number two, what happens if the markets open gap up somewhere over here? Then generally, markets will give you a doji. This is what I think. I might be wrong, but I will be planning for something like this. Why? I will explain very simply. Because over here, people who have bought on 1st December, they will not panic. They will be okay. At the same time, some kind of short covering can happen. People who have sold, who are carrying over puts, they already are in good money, and maybe at this point of time, their SL can be hit. So these things are possible. So if the markets are opening gap up, yes, you will try to go down for sure, but that intensity of selling will not come. The intensity of selling which you can expect if the market opens in this zone will not come if the market opens here. Yes, markets will try to come down, but it will bounce back, give you a doji. I will prove it out to you. It has happened in the past, so I'm just relating the data of the past. So if you see what happened on 31st August, exactly the same thing happened. On 31st August, markets took that support of 20 mm, which it took right now. Exact ditto copy. It took that support. Further, markets the next day opened gap up. So when it opens gap up, it will try to come down. That selling will happen, but it gave you a doji. It went up, it went down, it gave you a doji. It paused for a couple of days before falling again, right? So this is what I think about Nifty. I have given you the scenarios. Try to trade off it. I would personally now see I am in a short position already. I'm carrying some shorts, and I think a lot of people are carrying shorts. I would say observe the market. If you are in a weekly expiry for tomorrow or for this Thursday, 24th, my suggestion would be, if you get a gap up or a decent profit, if you get a gap down also tomorrow, exit. The reason is you have got about 80, 90%, 100% profits. Everyone should have at this point of time. So you should exit your weekly calls, weekly puts. I am personally in 21 March put and the next January put. So I am safe. I don't have to decay. That's just a couple of hints I would like to give you when it comes to the market. But weekly puts, you should think about that, whether it's Nifty, Bank Nifty. If you're holding December puts, you still have some time. But it's advisable to, to exit such puts and maybe go to December puts, or maybe go to January puts and have some more time on your end if the markets really want to fall. Talking about Bank Nifty, we'll give a quick update about Bank Nifty also. Bank Nifty looks weaker as compared to Nifty, and you have closed below 20 MA. That makes you weaker. So I think, as I've been saying, as Himalaya has been saying, and as the RSI is telling you, Bank Nifty, if markets will fall, this will be the leader in fall. And also PSU banks water rally, private banks water rally, they will obviously tumble more. And markets, if they fall tomorrow, if they open a flat gap, again, same ruling. If markets give you a flat opening or a slight gap down, gap up, plus minus 100 points, markets will have that selling pressure. But they will not have that selling pressure if the markets are on the upside. If they open with a gap up, then that will not happen. Let's see what happened on 31st August. See, exactly, markets also gave you a doji. So this can't be ruled out, because after such a big fall, markets will generally pause and then again fall down. It is not always the case, but can't be ruled out. So it is highly possible that market may give a doji tomorrow. So please consider that and plan your trades accordingly. That is what I'm trying to say. So in Bank Nifty, first thing is RSI below 50. That's one negative thing. There is no very positive thing about Bank Nifty right now, because every profit has gone. Profits all the way since 18th November have been washed out. So Bank Nifty obviously can find tomorrow. If it falls down, it can find the support here. 28,900. I will take a round number because this value will change. Currently, the lower Bollinger Band is at 28,897. This might become 28,900 or 28,900 tomorrow. So whatever is the lower Bollinger Band, markets will try to take a support there and then push. They will never immediately go below that. They will always hold there for some time. It's been done in the past. Below these levels, let's say a fall comes tomorrow, below these levels, then you can expect some support over here. And this support is around 27,600 levels. Whatever will be the 50 MA level, this will be the hurdle. This will be a place where markets will generally stop. I'm giving you some worst case scenarios, but let's see what happens to Bank Nifty tomorrow. And again, flat opening or a gap down will create some panic. It can create some selling. But one very important point is, if markets give you a big gap up or a big gap down, then please don't trade immediately, because everything will be gone overnight. So then trade price action and reduce quantity to half. If markets, let's say, open only at this price, then you have to wait for price action. And obviously, people like me who are in puts, we will book profits. So market can give you short covering, something like that. So please, if it's a big gap down, don't trade. Try to see, observe the markets. Otherwise, flat opening is the ideal for shorts. Whoever's not short can take a short. Overall, for me, I think it's a sell on rise market, and I will be considering it that way. So that's it for now, guys. I've given you a view about the market. I will try to come live in the market tomorrow if I can. Otherwise, you are getting all our alerts in our forums. If anything important's there, I will come up to alert our YouTube community. If you have any doubts, you know where to reach us. And yeah, I think that's about it. Yeah, that's about it. So plan your trades accordingly, and be safe in the market. My advice would be, try to observe the market. Just one small point. My advice will be, just observe the market for one day. The reason is because if the markets want to fall down further to 50 MAs, in 1-2 days, it will give you a crack. If markets don't crack in 1-2 days, or they will again try to go to the highs. So that is one point I want to give. Bank Nifty looks particularly weak, but Nifty, if it wants to fall down in 1-2 days, it will fall down. That's about it, guys. I will see you tomorrow in the post market analysis. Thank you so much.